IGCSE and O-Level Accounting, CIE short past paper with explanation. Khan Manufacturing, Commerce Lecture Online. Final Accounts of Manufacturing Business, Paper Code 711022ON12, October-November 2012 CIE Exam Paper. Question 5, Khan Manufacturing Account, Khan Income Statement, Khan Balance Sheet. The question is, following balances were extracted from the books of Khan, a manufacturer, on 31 July 2012. Factory equipment, office equipment and their depreciation. The information related to non-current assets is given. Office equipment disposal account. It is showing you a debit balance. Whenever disposal account of a non-current asset shows us a debit balance, it is taken as a loss, as an expense. If it has a credit balance, it could be considered as an income. But in this question, it will be taken as an expense or loss. Bank has a debit balance. Capital amount is given. Inventory at August 1, 2011. That means the beginning inventory or the opening inventory of raw material, work in progress, finished goods are given. Purchases of raw material are here. Direct factory expenses to be used in the manufacturing account are given. Indirect factory expenses to be taken in factory overhead portion will be given. Production wages, they are also known as direct labor or direct wages. Rent and rates, production management salaries. Because these are production management salaries, they will be taken to factory overhead. Office wage and salaries will be taken to income statement expense portion. Revenue will be used in income statement. Marketing expenses, distribution expenses are actually income statement expenses. General office expenses are also income statement item. 8% loan repayable, this is a non-current liability for balance sheet. Loan interest paid 2100. It means 8% will be calculated and we'll get the loan amount. Out of that interest expense, we'll see how much is paid. The amount which is not paid will be taken as addition to this loan and will be taken as interest payable as well. Provision for doubtful debt, trade receivable, trade payable balances are given. Inventory given at the year end, that means the ending inventory of raw material, work in progress and finished goods are these. Production wages accrued, that means still not paid, they will be added to production wages, that means direct labor. Marketing expenses are prepaid, these will be subtracted from marketing expenses and will be taken to balance sheet as a current asset. Rent and rates are proportion to the area occupied, 3/4 for the factory and 1/4 to the administration. We'll calculate in the same way. Contained within office wages and salaries is 8,000 taken by Khan. It means this is the drawing, the money taken by the owner. This should be recorded as drawing and this should be subtracted from wages and salaries amount. He also took finished goods for his own personal use, that is 1500. This means this finished goods 1500 should be subtracted from the purchases of finished goods because they are taken by the owner, or you can say these are considered as the drawings. The drawings total by the owner in this question are calculated by adding 8,000 to 1500. This means the amount of drawing will be used in the capital portion of balance sheet. So a total of 1500 and 8,000 will be taken when we are talking about the drawings for the owner. Depreciation charging policies are given and the doubtful debt charging percentages are also given. This is how we'll work on the manufacturing account and the income statement for Mr. Khan, and we'll prepare the balance sheet for him. Let's continue. Khan manufacturing account. Cost of raw material consumed in 2 columns. As we did in the previous questions, opening inventory of raw material plus purchases of raw material. The both will be added. Closing inventory of raw material will be subtracted and we'll get raw material consumed. Production wages, which are also known as direct wages, those which were accrued will be added here and will be taken here. Those which are accrued will also go to the balance sheet in current liability portion because they are payable. Direct factory expenses, our third main part of manufacturing account, will come here. The total of raw material consumed, direct labor and direct factory expenses will give us prime cost. In prime cost, we have to add total factory overhead. So let's make a list of factory overheads. Indirect factory expenses, rate and rents which are given to the factory will be coming here. Production management salary, because this is indirect salary, will come here. Depreciation of factory equipment will come here. The total of all these factory overheads will be added in prime cost and we'll get cost of goods produced. Work in progress opening will be added in this. Work in progress ending will be subtracted, and this is how our final amount of cost of production is calculated for Khan Manufacturing. After preparing manufacturing account, let's continue with the income statement. The pattern which we generally follow for income statement, revenues are given. Cost of sales will include opening inventory of finished goods plus cost of production which we had calculated in the previous slide. This cost of production will be added in the finished goods because we are doing it for a manufacturing business. The drawings made by the owner of finished goods will be subtracted and the closing inventory of finished goods will be subtracted. This is how finally the cost of sales is calculated by us. Revenue minus cost of sales will give us gross profit. Then we'll come to the expenses portion. Office salaries and wages. 8,000 include that part which was taken by the owner for his own use. Therefore, this 8,000 is to be subtracted from office salaries and wages. Rent and rates, remaining portion belongs to the office, will come here. General office expenses, equipment depreciation, loss on sale of office equipment, that is 500. That means this disposal debit balance, loss on disposal of sale equipment is coming here. Marketing expenses, the prepaid amount will be subtracted and remaining will come. Distribution cost will come. Provision for doubtful debt, as we calculate generally trade receivable multiplied by the rate will give us the provision. We'll compare it with the previous balance. If we have to increase the provision for doubtful debt, it will be recorded in an expense. Interest on loan, 8% interest on loan becomes due on us. It will come here. We'll make a list of all expenses. We'll subtract the expenses from gross profit and the final answer is the profit for the year. Let's talk about the statement of financial position for Khan Manufacturing. Assets portion and capital and liabilities portion. Let's talk about the assets portion. It will comprise of two sub portions, non-current asset and current asset. In non-current asset, we'll prepare the list of the non-current assets which are given to us but at their book value. Property, land and building, subtracted their provision will give us the net book value. Factory equipment, subtracting the provision will give us its net book value. Total non-current assets are given to us. Current assets, first of all we'll take inventory. That means we'll take ending inventory of raw material, work in progress, finished goods. Then we'll work on trade receivable. Trade receivable subtracting its provision for doubtful debt will come here. All other prepaid expenses will be listed here. Because bank has a debit balance, it will come here as an asset. The total of current assets is this. Adding total current assets to total non-current assets will give us total assets. Let's work on the second main part of the balance sheet. Capital portion. Capital plus net profit minus drawing will give us the net amount of capital. Then we'll work on the liabilities portion. Non-current liabilities will show us the long-term loan. Current liabilities will show us the accrued expenses and trade payables and any other liability. The total of liabilities plus the capital at end or the final amount of capital will give us total capital and liabilities. Total capital and liabilities will always be equal to the total assets, and that is how the statement of financial position for Khan Manufacturing is done. Like, share, subscribe, Commerce Lecture Online.